I joined StartupLanes WhatsApp group few months back. So I have one fundamental question, which is in line with your previous answer to the question which you just shared. So let's say there are two companies. Company one is focusing on the revenue aspect. So they're burning a lot of cash and they are not focusing on the profitability, but they are just focusing on the customer acquisition and the revenue. And company two, let's say they are more focused about increasing the profit in the first step and then scaling it up. So as a investor, how will you evaluate both of these companies?
Can you come again? You said one company is doing good profit, another is not doing good profit. Is that the question?
Yeah, another company is focusing on revenue and not profit. So in that case, which one is lucrative for you to invest?
Okay. See, what happens is generally getting profits at initial stage of the startup shows that you are not expanding. I'll tell you the reason why. Suppose you are getting 70-80% profit from a particular product. Now, what would happen? If the product is really good, if there is huge demand, automatically you will start getting competition in the market. How? First of all, your staff will leave and they will start, because you cannot hide anything from public, right? There will be people who will get to know about it. Nothing is hidden now in today's technology world. Your staff will leave, they will start their own business in your competition and they will become your competitors. That is how everything has happened in the past, right? So else, if there is no competition coming, somebody says I have 70%, 80%, 200% margin, that shows the market is small. And if the market is small, then it is not a good investment. Now, another thing is, if you are having, say, growth prospective, let us take an example of a very small startup, say Golgappa outlet. Now, if they start one outlet and if they are getting huge demand, which is pretty obvious, right? Then they should start another outlet. Why would they take out profits and stop? And when you are constantly expanding, doing marketing in new territories, setting up, there will be a bit of capex also. There will be a lot of marketing expenditure because you are scaling up, you are building your intellectual property. So what I believe is, either you build your intellectual property or you take heavy profits out of it, right? Both the things are not possible simultaneously for except few cases. Exceptions are always there. But generally, while you are investing into your intellectual property, obviously you have to bear losses instead of profits, right? So what I feel is, profit margin should be good and it should not be phenomenal. If somebody is getting phenomenal profit margins, again, either it depicts that the market is small or the competitors will enter this business one day and there will be hyper competition, because the first thing that happens is your own teams or your co-founders, they separate, right? Because they know this is what happens happened in a typical example is Mezonite or Mozonite, whatever you want to call it. There is a lab made diamond, and people who started manufacturing it in initial days, they started selling it as good as the price of the real diamond. So people got to know there was huge margins, and their teams, their co-founders left and started on their own. Now everybody knows what is that, right? So similarly, this happens. If something has lot of high margin, automatically market will adjust. Market forces work automatically. This is the law of economics. And in case the profitability is good, profitability means if somebody is having 60%, 70% profitability, but net margin, they are bearing net loss, then it is okay. It depicts that they are constantly innovating, they are either discounting and passing the value to their customers. So all those things, if you do, you are building an intellectual property. If you are building your customer base, that is going to fetch you in long run. Because in startups, we don't calculate the formula of customer acquisition to immediate revenue. We focus on the formula of customer acquisition to the lifetime value of the customer. That means in the lifetime of the business, how much money that customer will pay you as revenue. Any follow-up question on that?
Yeah, Shishir, in that case, see, in earlier times, you would see that this method was not so popular. correct? Valuation based on the revenue and or revenue multiple. But still, there are a lot of businesses we can see in nowadays which are 100 years old, big conglomerate, and they succeeded through that strategy of keeping unique economics alive and focusing on the profits first.
See, what Airtel did in 15-20 years, Jio did in 1 year, isn't it? So what we know as of now in technology's time, that scaling up today is very fast. It is possible in the world of digital marketing. Overnight you can do business. Older days you have to open up a shop, wait for the customers to pass from their particular area. Only Doordarshan was there, and even before that, even Doordarshan was not there. So no advertising mediums. Even if you are doing anything very good, people were not knowing about it. But in today's time, you can rapidly sell, right? So time has changed, and people who have no knowledge of business at all, they are also able to make money. It's very easy. It's not very difficult if you understand it well. So what I would feel is, typical business, if you are asset heavy, it's not the way to go, because if you invest into, say, real estate, a typical property will fetch you 5% ROI. If you must have seen ads of, or maybe property dealers might have been approaching you. You buy a bank rented property, ATM, right? And they will, if you buy it for 1 crore, it will fetch you 5 lakh rupees per year, not monthly. But in a business where you are doing the digital marketing, if I'm selling, say, if I'm selling ebook, right? I'm launching my ebook in 4 days, which is called quick startup funding, right? Now I priced it for 99 rupees. My technically my cost is nothing except Amazon is charging 29, 30, 40 rupees something, right? Now, if I start selling it through digital marketing and I incur a cost of 10 rupees per sale, then also if I spend 10 lakh rupees, I will be making 20, 30 lakh rupees. Right. That is how CAC is to lifetime value or immediate revenue is calculated. Right. So traditional businesses now, it's very difficult for them to even survive. I know a lot of big businesses. There was a printer who used to print cards, wedding cards in this Chavdi Bazaar, Delhi. No, and they are very rich, wealthy people. They have been doing in this since last 60, 70 years. But now they are facing difficulty. They say nobody comes in times of print vista and all. People want to get everything at home. They don't want to go out and go to places like Chavdi Bazaar and go in the traffic, take a rickshaw. Your car will not go there. If you take a rickshaw, you'll have to go through shady places and all. Nobody wants this. If you have the money, you just go through agents, or you go online if you want to save money. That is why we have to find out whether the startup is using the modern approach or not. Those who will not change will definitely be out of the market. This is what I feel. And I have many examples. I used to do door-to-door marketing sometime, when I was in college. So Delhi Lajpat Nagar, there is a shop called Style Shoes. I went there to tell them about digital aspects, how they can sell online and all that. And they said, beta, हमें तो कुछ जरूरत नहीं है, हमारी तो बहुत सेल हो जाती है, और ये डिजिटल वगैरह तो हमें समझ नहीं आता, इससे ज्यादा काम करके क्या करेंगे. 2-3 years later on, their business started falling. Somebody told me that they are looking for some digital agency and all, and later on they also implemented that, because you cannot survive if your competitor is using digital marketing and sending offers. While you wake up, you open up your phone, you get an offer of that particular same shoe which you were buying for 2,000 rupees. It is available for 1,000 at the same similar shop or same location nearby. Then definitely you will move there, and people are doing this. This is called disruption. You take away somebody's customer, you break their sales process by selling at a cheaper price, and definitely this is going to happen. No, if the product is same. If the product is not same, obviously people go out of the city at factory outlets to buy branded products at discount, right? So that's how in US also the model is very much proven. People stand out in the lines, in long queues they form, just because the stores will open and they will offer discount, and these kind of promotional schemes always works. People want to save money, and if you provide discounts on good products, they will definitely buy more, and that's how this industry will keep on working.